Hello, this is Chad Stayskull from Eagle Wealth Management, and I'm here with our Educational Economic Update for February 2019. In this month's video, I'm going to discuss some of the major headlines that influenced markets in January. I also hope to provide some insight to what these developments could mean for you as an investor. Well, January 2019 is behind us, and what a difference a month makes. By the end of 2018, the S&P 500, Dow, and NASDAQ posted their largest annual declines in years. In fact, the S&P 500 and Dow experienced their worst December results since 1931. Fast forward a month, the momentum has swung in the opposite direction. The S&P 500 and Dow were both up over 7% for the month. These gains mean that both indices had their best January performance in at least 30 years. The NASDAQ increased by over 9% last month, which was its best January since 2001. These gains occurred despite the longest government shutdown in history continuing for much of the month. Why did markets rebound in January? A few details helped change investor sentiment, including the Federal Reserve comments in corporate earnings season. In December, concerns about how quickly the Fed was raising interest rates contributed to the market declines. By January, however, Fed officials indicated several times that the central bank would begin taking a more dovish view. The Fed also chose not to raise rates after the most recent session, saying it will be patient when deciding on future increases. Market confidence grew, knowing that the Fed isn't rushing to hike rates again soon. Corporate earnings season also largely affected stock performance. By January's end, about half of the S&P 500 had released their fourth quarter results. The data reinforced that corporate growth had slowed later in 2018, offering no new surprise. Instead of driving market losses, however, January's earnings release contributed to market growth. Well, why is that? Well, this has happened in part to a few solid reports from large companies that helped ease investor worries about a potential recession. In February, the remainder of corporate earnings season is ahead. Both global growth and the ongoing trade discussion between the US and China may also remain on investors' minds. Further, we should receive some delayed data, which was postponed by the government shutdown, including the first reading of the fourth quarter gross domestic product growth. In the weeks to come, we're going to be monitoring these and other details. And we look forward to sharing these perspectives with you on the rise. That's it for this month's Educational Economic Update. Please remember, nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 541-330-0220. We'd be happy to talk to you. Once again, this is Chad Stayskull with Eagle Wealth Management, signing off for the month of February 2019.